All right. Good morning. Good morning. How you guys doing? Hold on. Let me just invite you guys to speak here. Oh, look at that. JC's here. JC, Sean, what's going
What's
on?
up, Patrick?
Oh,
What up, P?
Look who it is.
look what the cat dragged in.
Yeah.
We got JC on the call. Wow.
Yeah, what brings you here?
Well, just doing a little charting. I don't know if you guys heard, but it's kind of a thing I do.
See,
Wanted to hear what you fellas were saying, and you just invited me up here. So,
you must have heard about how much fun we've been having on these spaces every week.
listen,
Yeah.
some of us have to work and can't just sit around chit-chatting all day, right? Gallivanting around the interwebs. Some of us, right, Sean? Tell them, some of us are working.
We got shit to do, man. We got shit to do.
Speaking of not working, are you back from South Dakota?
Yes, I'm back in the home office.
Are we flowing today?
We are flowing today.
What? I don't know.
Well, hey, listen.
What are we buying? What are we buying?
I just bought VRRM Vroom.
Micron's working.
That Micron against 66 is nice, huh?
Yeah, man. I'm in it. Let's go.
Oh, this Russell. For the longest time, the narrative was the Russell's just. I mean, it was. It was really.
It's more like
weak.
65. I don't know why I keep saying 66. It's more like 65 is the bigger level, right? 64.
What, Micron?
You talking Micron?
Micron, yeah.
I'm not at my desk. I pace around while I talk.
Yeah, I think it's like that 64 to 66 level. It's kind of like that area. I guess if you really want to let it dance, 64. If you want to keep it tighter, 66. But I like that base, man. One of the things that we keep talking about again and again and again is how many stocks and ETFs, sector ETFs and industry group ETFs in growth, internet and semis, all look the same. Like this massive basing that started in the first half of 2022 into the back half of last year and has continued this year. They look like giant smiley faces. Like they keep coming up again and again and again. Micron's just one example.
Hey, JC, this is going to make you happy. Speaking of sector ETFs, the old risk reversal we put on the Russell IWM, we are about 10 cents away from selling half of our calls and covering all the puts.
All risky.
I got a lot of pushback from my associates on that particular call, if I remember correctly. You guys didn't like it at all. I thought the risk reward was so advantageous. Like, fine, it worked, great, or it's working, great, but the risk reward was so good. Same thing with the Caterpillar. You guys were hating on my Caterpillar trade, and fine, it's working and great, but let's say it didn't. Like, the risk reward was so favorable, no?
All I said was I'd rather be in the leaders. That's all. I liked it. I came around.
I don't remember hating on the IWM trade, but I definitely was not as excited about the cat trade as you were. But it's working so far.
I feel like it's a similar trade because I feel like it's the rotation trade. At least it's my rotation trade. Is small caps, value, interest rates creeping higher, like that rotation trade. I think there's a few different ways to express it. I think those are just a couple.
I didn't like either of them, and JC, I think it goes back to that whole theme, like we talked about this morning, where it's one of the hardest questions for me. Do you buy the laggards and bank on them catching higher because it's a bull market environment, so that should happen, or do you just stick with the leaders? That's a tough question, and I think it depends.
Well,
right?
I think the answer is definitely it depends on who you are and what you're trying to accomplish. But I feel like the way me and Sean look at it is all the other stuff that we were doing was all like the big cap. We were buying Google, Meta, like we were getting as growthy and mega cap growthy as it gets. And don't get me wrong,
Those were working.
It's been working.
Yeah.
Right? No, agreed. Those were working. But the whole point is like, I at least, and I think Sean, I don't want to speak in your behalf, but like I have been trying to do something else in addition to that. No?
Well, hey, what a great luxury we have that even the trades that we don't like that much are working.
Well, hey, listen. Enough talking your book. Enough talking your book.
Whose book are we supposed to talk? I hate when people say it. Whose book? I'm telling you what I'm doing. Like, you want me to tell you what Joe Fahmy's doing? I don't know what the fuck Joe Fahmy's doing. You want me to tell you what Ryan Dietrich is doing? Like, I don't know what he's doing. I can only tell you what I'm doing. And sometimes I hear about what Straza and Sean are doing, like through the grapevine, and like that's the extent of what I know.
Well, listen, I want to talk about regional banks and small caps, right? Because I mean, small caps, Russell 2000 is like the only index up right now. It's up by a decent margin too. It's up like 1%. Regional banks up like almost 4% here, month to date highs. Do you think the lows are in for regional banks?
Yes.
Yeah. Just from what? Like obviously that's a tough question, and we won't know in hindsight until hindsight. But from a sentiment point of view, I mean, it was pretty bad, right?
I think it's reverse engineering the question, right? So the regional banks bottom. I think that if yes or no, and then I think that if the regional banks, let's say the opposite, if regional banks did not bottom, what are the things that would be happening? Right?
Market
Regional
would
banks,
be catching lower.
the market would be catching lower, yes. Regional banks, if they were going to be breaking down, I would argue small caps are going to be breaking down too. IWM is going to be breaking those summer lows. You're going to see that. You are also probably not going to see rotation into value. You'll probably see the underperformance in value drag the leaders in growth down with it. You'll probably see those sorts of things happening. You won't see Berkshire Hathaway making new 52-week highs, the largest component of the U.S. financials index. You won't be seeing that. You know, you'll see a lot more divergences amongst the leaders that we've seen this year, particularly around the world. Like Europe's probably not going to keep making new 52-week highs. Europe will maybe start diverging somewhat and start. We haven't seen that at all. I feel like re-engineering that question and thinking about the opposite. That's why I think that regional banks bottomed, because I do think the Russell 2000 bottomed. I do think that we're getting rotation into value. You see what I'm saying? So
right.
If those things were to play out, regional banks are probably not collapsing lower, bringing financials and the rest of the stock market with it. The stock market's probably doing well because we're getting that rotation.
I think it's a good point, JC. Like the rest of the market continues to suggest we are in a new bull market and we're moving higher, and that means that the weakest areas should play catch up and catch higher.
Hey, how about yields here? This is the 8th day in a row that the 10-year has been higher.
Creeping higher. That's part of the rotation to value, the creeping higher yields. I mean, it makes perfect sense, no?
Yeah, I mean, you say a rotation into value, but tech has been working really, really well, and it's been growth. The past, pretty much this whole year, right?
Correct. And I don't necessarily think that's sustainable if rates keep doing what they're doing. I think that we do get the rotation. It doesn't mean tech needs to fall. It doesn't mean communications need to fall. They can underperform for a little bit. There's nothing wrong. Like that wouldn't be unusual at all, especially after such a strong ripper off the lows. Some rotation this summer into some other areas, I think would be healthy for the market. I don't think that's necessarily bearish for Apple or for Google.
We need it, and tech has earned and deserves a breather.
It's like Acampora said, right? Rotation is the lifeblood of bull markets, right?
You see it, right? In bear markets, the remaining leaders catch down to the laggards, right? And in bull markets, the laggards catch up to the leaders, right? Which is what we saw this year. Remember, in the back half of last year, everything was working. Everything was working except for growth, right? And then what happened? Technology, consumer discretionaries, communications, they still struggled into the fourth quarter. Everything else was already working. And then what happened this year? It's the exact opposite, right? You're getting rotation into those underperforming areas, which is what you see in a bull market. And if this was a bear market, then those leaders in the back half of last year would have caught down to tech and growth, which were the laggards. But that's not what we're seeing. The laggards are catching up to the leaders. That's what you see in bull markets. By the way, we were up, the S&P 500 was up 7.5% in the fourth quarter last year. Another 7.5% in the first quarter this year. S&P is up over 3% this quarter. Like, I don't know what planet some people are from, but by definition, stocks going up every quarter is not a bear market.
Look at you, stat guy. Where'd you get those stats?
The New York Stock Exchange. I don't know. Where do you get your stats?
Stats.com.
So I've been hearing a little bit of chatter about this little mini head and shoulders forming in Bitcoin. Do you guys think it's actually a head and shoulders, or what do you think? Just a little consolidation after a nice
Don't
run?
get JC started on Head and Shoulders. Come on.
Yeah, you know
better.
the answer.
Knees and toes, knees and toes.
Oh man, that's exactly why I was getting him started.
I mean, listen. Correct me if I'm wrong, but that 30, that 29 to 31,000 area in Bitcoin had been a ton of support that broke, and that's overhead supply. Like we knew that going into this level. The question is, how long does it take demand to absorb that overhead supply? How long does it take? Does it take no time at all? Does it take a long time? Is demand ultimately unable to overwhelm that supply and prices go down to 20, maybe even break 20? I don't know, right? What I do know is that the longer term trend remains up for Bitcoin. We're seeing a lot of positive trends in technology and in growth stocks and things of that nature, which historically is not necessarily bad for Bitcoin. They've been moving together. So all of those things are pointing to, ultimately, I think we do break out above 31,000. And if and when we do, I'm going to be a very aggressive buyer. And, I own a lot right now, in my opinion, a lot for me, but I'll own an irresponsible amount above those levels, because I don't think if that happens, I don't think we just get back to 65, 66.
Yeah, we're going.
I think it goes straight to 100, 120. Yeah.
I wouldn't mind a little retest of like the base breakout level right at 25 here.
Yeah, and that would probably be like a kind of a measured move down to if that is a head and shoulders.
I don't know. I think we're looking kind of failed toppy here.
Yeah, just a little, but basically the message is, kind of flop, and you can't really expect further upside till we reclaim that 32,000 level.
The other thing I think about too with Bitcoin right now, I'd love to know what you guys think about this, is like we talked all last year and the year before about how strong of a correlation Bitcoin had to things like the NASDAQ and, large cap tech. And that's just another software stock, yada, yada, yada. There's been a pretty big divergence there over the short term, right? With Bitcoin going down and sideways and tech stocks ripping. So
do you think that was a case of, like, you've heard the saying, like in bear markets, correlations go to 1 and stuff like that. Do you think that's what we saw last year? Just kind of a risk off,
I think that
trade across the board, and that's why they were moving.
That probably had a lot to do with it. But regardless, more and more.
Yeah, but you can go back in time, and Bitcoin moves with high beta, low volatility, and moves with growth. That's not just a new phenomenon,
right? So similar to the banks, why not say Bitcoin has some, catching up to do here too?
Yeah. That actually is what I think.
Yeah.
I think that is what you're saying. And I don't necessarily know that we break through that 30, 31 this time around either. Maybe it takes longer, but I think it'll keep bumping its head against it. I think it'll keep doing that, and then let's see if this is it or if we need, but man, we get that breakout, mortgage the house, I think. I think about it, right? Because I own my house outright. I don't have a mortgage. I mean, so like if I really want to get, like, do I do that? Like, I don't know. Do I really want to be that? I don't know.
And JC, what's your line in the sand for the breakout?
It's a 29 to 31 level, right? That's that former support that broke. There's a lot of market memory there, a ton.
Right. Yeah. It looked like it was trying to bottom there for a while, for several months, and then ultimately it broke. So like you said, there's probably a lot of overhead supply there. A lot of people. I mean, the market's proving that, right? We know, right? We have the data. We know that this is what demand absorbing that supply looks like. It looks like a sloppy mess, right? This is what this is what you're seeing. Like, this is what's happening. This is, accumulation and distribution, all at the same time, trying to figure out which one there's ultimately going to be more of. That's what you're witnessing. All right, so you guys know I love big bases. Give me some bases. Give me the best looking bases you got.
All right, me first. Look at these tech subsector ETFs, whether it's Sky, IGV, the semiconductor ETFs. These bases.
What is Sky again? What is Sky again?
Cloud. Think about it. Think
Oh,
about
okay.
it, Pat.
Yeah.
No, but these bases are going, and I think that's just yet another just the latest piece of confirmation for the new highs in things like the Nasdaq and XLK.
Yeah, I mean, it kind of looks similar to that Micron setup there, where it's, just basing basically the last.
If all of the charts that you're buying look the same these days, it's because they should, and you're doing it right.
Is that it? Any individual names?
I bought Micron yesterday. I was in DraftKings from last week.
How big of a base do you want? You want the biggest of the granddaddy of them all?
Newmont Mine.
Give it to me, yeah.
Newmont Mining. It's the granddaddy of them all. Is there a bigger base out there that in existence?
How many years?
We're back to the 1987 highs. The crash right before the crash of '87. Newmont got destroyed in that crash. Right? And we've never been back. We're back there now.
We should have a biggest base competition, and we all bring.
That's the winner. How is that not the winner? What? Give me a bigger base. Some of these healthcare stocks are like 23-year bases back to the 2000 highs. But what goes back to '87?
I don't care. You can use ratio charts. I'll find them.
That's true.
Yeah, I mean, we talked about that earlier on the morning show. I mean, even Japan isn't as big as Newmont. Japan's what, like a 33-year base or something like that?
Think about Japan. That one park in Japan, in Tokyo, it's not even that big of a park. That one park, the real estate was worth more than all of the real estate in the state of California combined. That one park. So that was in 1989.
How did we mess that up as humans? Like, how did that even happen? That's crazy.
That is some crazy shit, right? So anyway,
the bubble wasn't just in equities. It was like real estate and was it just all things Japan?
Yeah, man. That one park. So it's a nice park. It's a pretty park. You should go. But like, I don't know.
You been?
I've been there. Yeah. I mean, are you kidding me? Tokyo is like my favorite place in the world. You know what you could do in Tokyo? They have this thing where you could dress up like characters, like Batman or Superman or like Mario or Luigi, and you could ride go-karts all over Tokyo in the go-karts, dressed up like freaking characters. It is ridiculous.
How did we not do this when we were?
I know.
Didn't you two get kicked out of the Japanese stock exchange when you guys were there?
We did.
We were asked to leave. We were not. We were asked to not be on the floor. You guys, they're like, you can't be here. There was like an IPO going on, and like, we were just looking for candlesticks. Like, we're in Japan looking for the gotta be candlesticks somewhere. As it turns out, there's not any candlesticks anywhere, not even at the Tokyo Stock Exchange.
They were very polite about it when they kicked us out.
Yeah, because they're all like dressed nice. They got this IPO ceremony, and like me and Sean look like Run DMC with like our Adidas jumpsuits. Yeah. Like, ridiculous.
You guys look like a rap duo.
Yeah. There's a video on YouTube if you guys look it up. Like, I think it goes like Tokyo looking for Japanese candlesticks, something like that, right? What's it called? We put it on YouTube.
Yeah, something like that.
Yeah, you can find it. If you can't find it, ping me. It's a funny video.
I got to get to Japan, but you know what I've heard? I've heard they have like these vending machines, like ramen vending machines, right? So you go up and you just like click the buttons for what ramen you want. And then there's somebody like behind the thing making it. You don't see them, but there's like a kitchen behind the little interface thing where you order your ramen, and then just out pops your ramen.
Yeah, they got all kinds of great stuff. They got some that look like voting booths, like you're in there to vote or something. And then like you got to fill out the form on whether you want your ramen, like how you want the noodles done, like more cooked, less cooked. If you want garlic on it, if you want it spicy, how spicy do you want it? You answer all these questions, this questionnaire, you put it under the thing, and then they just bring out the ramen, and it is the best thing you'll ever have in your life. It is magical.
Sounds like a lot of work. I don't love ramen.
Well, back to the charts.
When you go to Tokyo, you eat the ramen in Tokyo and tell me you don't love it.
Back to the charts.
Sorry that the ramen in Connecticut or in Key West, like neither of those places know anything about ramen.
I've had good ramen.
So, you have the Nikkei at 33-year highs, but you look at EWJ, like if you're a U.S. investor, you can't just go buy the Nikkei, right?
How do you say that?
You'd probably-
Oh,
How are you saying that?
The Nikkei, the Nikkei.
How do you guys say it?
DK.
Nikkei.
The Nikkei.
There you
Okay. But
Yeah, you go with EWJ
if you're a U.S. investor,
or-
you're probably buying EWJ.
or DXJ. JC likes DXJ.
No, DXJ. Yeah, of course, because DXJ, you own it in yen, which is why DXJ has been making new all-time highs. Like people are talking about bear markets and crashes. Meanwhile, Japan ETF new all-time highs every month. That's priced in
wow.
yen. Yeah.
Oh, Wisdom Tree Japan Hedged Equity Fund. Oh, wow. Yeah, that looks a lot better than EWJ, but EWJ gets all the attention.
Because people are dumb.
Well, you heard it here first. People are irrational. Who would have thought?
But it's
The market can stay solvent longer than people can remain irrational.
I think you have it the other way, but
Not for this environment, I don't.
But it's not just the Nikkei; it's the German DAX, the CAC 40. I mean, we're just getting a lot of new highs overseas, and that's not a bad thing.
either one of you, JC or Steve, what are some of your favorite countries other than Japan right now?
Developed Europe,
Like countries to buy.
Anywhere in developed
Yeah.
Europe. I mean, from Italy to something like Switzerland looks okay, even consolidating here. You want to stick in Europe.
Yeah, Germany making new highs. Some of these healthcare stocks out there. Look at AstraZeneca, Novo Nordisk, like some of these like Danish healthcare. Like
Yeah,
I mean,
the big pharma stocks are so good.
there's this misconception like, oh, like if you can't find stocks in America to buy, you're not looking hard enough. That's fucking bullshit. That doesn't make any sense at all. Who cares what country it's from? It trades on the New York Stock Exchange. It's liquid as hell. Just buy it, whether it's Swedish or Brazilian or from Texas. Like, what's the difference? So, but there's a time and a place for everything, right? And people, I think, need to overcome their recency bias that the United States was an outperformer for a long time because of all of its growth and tech exposure in an environment that interest rates are getting slaughtered. Of course, the United States is going to be an outperformer, but in an environment that perhaps interest rates are rising or more stable, and there are other groups that are leading, like industrials or healthcare, or energy or whatever it is. There are different countries and regions around the world that will do better than the United States in that environment. By the way, you go back 100 years and go back to every bull market in history, in a lot of those, the United States underperformed other countries. That's actually perfectly normal. It's just that in the last cycle, the U.S. dominated for so long, people think that it's always going to be like that. But we know for a fact that it's not always like that. In fact, it usually isn't like that.
I got one. Can I give you one right on this theme?
Yeah, absolutely.
All right. I'm going to name a ticker. JC, where's it from? ASML Holdings, semiconductor stock. Big company, too.
That's the Dutch master.
That's it.
Oh, I was going to say Netherlands. I was close.
No, it's a Netherlands
You got
company, really. I was going to say Taiwan.
Netherlands. No, it's a Dutch master. You guys know that.
Yep.
ASML.
690. Look at this base. If you like Micron,
That
if you
is
like
a nice
AMD, this is a big one. Looks good. Looks really good.
So, I mean, international continues to work, but I think a lot of people, or at least myself, when I think of international, my brain instantly goes to EEM for whatever reason. And emerging markets hasn't really, it's not reflecting that strength in international right now. Is that because of China? Because China's such a big weight in it?
No. In fact, when you look at emerging markets with China and you look at emerging markets without China, they look exactly the same. It's an emerging markets thing, not a China thing.
What's the emerging markets ex-China?
EMXC. It looks better, JC.
Okay, but is it like when you look at the returns, I mean, you're not seeing much of a difference. Like you can't say, oh, it's because of China.
No, they've both been trash.
Yeah. It's really been developed. Outside U.S., been developed.
All of Asia
Good stuff.
has been weak, really. So Japan getting it together here is a big development for that region.
What do you mean other than China? What other?
Yeah, but Japan's like its own animal for like in good times and in bad times. It's like it's just its own beast.
Yeah, I'm talking about Korea, Singapore, Taiwan. They've all been kind of struggling. They don't look like Europe. I'll tell you that much.
So as far as international, you want to be sticking to Europe. Is that correct?
I mean,
I heard you
it's
right.
an easy answer. Like, it's not even close. Do you disagree?
It's been working. You know, European equities, the Euro Stoxx 50 is up like 50 something percent since interest rates peaked in October, and the dollar peaked for that matter as well. So the European equity, people are talking about bear market. Like, I mean, we're seeing huge returns in Europe.
Yeah.
In addition to the, I mean, we're getting huge returns in America, but we're getting even much more extreme positive returns in Europe for sure.
So you guys mentioned a few bases. I got one. Not a base, but I want to ask you guys if you guys see any failed moves out there that you really don't
Yeah,
like.
we were talking about them this morning, these retail stocks, like something like Dick's. You know what I'm finding? That the bases that are reversing off of bigger downtrends, like these tech stocks that are entering zones where there is former price memory from the past few years, are working better than the ones that are trying to resolve to new all-time highs.
Like a Dick's or something like that. You're saying like a Micron versus Dick's, right? Where
Exactly. Yeah.
it still has a lot of overhead supply to work through, but it's actually holding up better than something that was just at all-time highs trying to break
I mean,
out.
don't get me wrong. New all-time highs are holding. Like you talked about Green Brick this morning. There are other home builders that did it recently. So like we are staples. A lot of staples stocks recently broke out to new all-time highs, especially a lot of the big
like
ones.
what? Do you know any?
But they're all pulling back now, and the bases in growth and tech, these big reversal patterns, they're still working higher. Like look at XLP. All those staple stocks that were ripping and we were talking about earlier this month are getting hit pretty good now. Look at Pepsi. Look at Pepsi. That's Pepsi. That's your low volatility stock.
Oh boy,
Well,
there you go.
Understand low volatility. Low volatility is making new 52-week lows relative to the S&P 500. You know what happens? You know what doesn't happen in bear markets, right? In bear markets and downtrends, low volatility stocks tend to be outperforming. These are consumer staples. Low volatility stocks outperform. You're seeing new 52-week lows on a relative basis. That's perfectly normal characteristic of a healthy environment.
These things are getting
where stocks are going up.
These things are getting smacked though, JC. Well, wow, look at these.
Yeah, because who the fuck wants to buy Pepsi when small caps are up 1-2% every day?
Yeah, it kind of reminds me of McDonald's too. That Pepsi chart, like they were both just ripping, and then in the last week or two, they've really pulled back sharply. A lot of those fast food stocks were really working. In the buzz this week, we talked about Wendy's.
Oh yeah.
QSR, Yum Brands. JC, you mentioned Chipotle. They I mean, they might need a little bit of a pause here, but they were really a pocket of strength the last few weeks.
Yeah,
but anyway,
they're getting hit good. Hold on. I don't love this action in the home builders either. Look at these last three candles. Not great.
Yeah, consumer discretionary was really doing their thing for a little bit, and now they're getting hit as you're getting rotation to some of those other areas. Like, I wouldn't be surprised to see some of that in tech.
Discretionary is weird because if you're looking at XLY, you're not going to see that weakness because it's so cap weighted towards mega cap growth. If you look at something like RCD, the equal weight discretionary ETF, we're down more than 50 basis points, almost 60 basis points on the day versus XLY, which is up 0.33%.
A lot of Amazon there.
Yeah, exactly right. So. All right, Pat, you can end our fun now. Fun, please.
I can.
Do we bring Spencer in to end the show?
Yeah, absolutely. Where is he?
Come kick everybody out, Spencer. He's so good at that.